Shalee Peters joining you now on the Rural Radio Network, and we have in studio today here with us our guest Sterling Liddell. He is the Senior Vice President for Food and Agribusiness Research and Advisory. And Sterling, let's just kick right into, we are in the first quarter of 2015, and we're going to talk outlook a little bit as far as grains. What kind of information do you have for us?
Well, good morning, Shalee. It's great to be with you this morning. We are looking this year at a very odd year compared to the last 5 years. Markets look like they're going down. We're coming off a bumper harvest that acted like a drought for the first part of the year, trying to decide where things are going and what to expect as we go forward.
Okay, and you talked about those prices. They've been kind of all over the place. They really took a dive in 2014, looking out into 2015 and even maybe into 2016. Are you seeing that steady or continuing to drop? What are you looking at for that?
Well, corn price has really been one of the key drivers, although soybeans have been an issue as well, because they're really making a case for more acres this year being planted to soybeans. So starting off with corn, corn started out the year dropping pretty dramatically. We actually, in the nearby contracts, got down as low as $3.18 for corn, and that's off the high in 2012 of $8. So it's a pretty big drop, even between 2014 and earlier on in that year when we were well over $4, almost $5 per bushel on corn. So that was a big drop. Then all of a sudden we saw an increase in price, and it got back up around $4. And just recently we've seen that drop off again, starting to come back down to where it's probably going to settle. Right now we're in a downward market, and we expect to see a little bit more downward pressure on corn as we go forward.
Okay, and what about for soybeans?
Soybeans have been a little bit different than corn. It's been in a sideways market because soybeans were so tight coming out of last year. We got down to very low levels of stocks to where we may not have even had any soybeans left. A lot of crushers were scouring the countryside looking for soybeans, and they had these big pipelines that they needed to be filled, crush back orders on crush, so they were selling meal to poultry and hog producers, and it was a challenge to get filled up again. So soybeans have maintained a little stronger position. China has been very strong, moving at almost a 20% higher rate than they were last year on importing U.S. soybeans. So it's been a little stronger and held in there. But as we go forward, we expect to see that break as well. And as we get into spring, especially if we increase soybean acres, we're very bearish on soybean outlook.
Okay, and you talked about those numbers as far as acres. Informa just released their estimates today. You guys are going to have estimates out here soon as well. They had corn down 2 million acres, soybeans up 4.3 million acres. Any response to that?
From where we are right now, we had actually had corn down a couple million acres, going from 90 million, a little over 90 to a little over 88 million acres, and soybeans up a couple million acres, or 1.5 million acres, with some acres moving to other crops, more regional crops. Right now, though, what we're looking at is somewhat of a rebalancing. We actually believe that corn is going to be a little stronger than that as we go forward. So we're moving our corn estimate up to about 89 million acres, and soybeans will keep somewhere in the 85 million acre range. That will all depend on what happens this spring. If we get that break in soybean prices and we start to see corn actually flowing out of the countryside, which it's been very hard to do because of the storage that's gone on, the cold weather, and also the very wet crop that was put up across the whole U.S., then we could see some rebalancing. But right now we're looking at probably corn in that 89 million acre range and soybeans closer to 85.
You mentioned that storage. A lot of farmers who had on-farm storage were holding on to their crops through these prices. Any idea of what you think will be happening coming this spring? You think they're going to sell on those, or where do you see that going?
The problem with the storage, it went into storage. It was low price during harvest, although we saw a late harvest, and then as the harvest drug on, we started to see prices improving, but then going directly into storage. Even the corn that was going into the elevator was not being priced. It wasn't being sold. It was being held on price later contracts, rolled into the first of the year or later, and then also put up on the farm in the bin. Right now, a lot of that is frozen up, especially corn that went in wet is frozen up. So it's hard to get it to flow. If it hasn't been priced, it doesn't make sense to sell it unless you sell it at a premium. And so right now, it's being held. There may be some winter premium still in this market, even though it's come down. We still think there's some winter premium built in. But until we start to see warmer weather, we don't expect to see a huge movement of corn. March, especially since it was wet going into the bin in places, we were likely to see some flow and also cash needs for paying off rents and also input costs. So March is really that time when we're looking to see the flow start to move, although we may see some before then. And then, of course, July during bin cleaning is going to be the issue. And how much corn acreage we plant will really help us determine when that crop's going to flow.
Okay, and real quick here, going back to some of those numbers, do you think that'll affect what you had just mentioned, how much corn gets planted, how much, if farmers will be changing their minds as far as what gets planted this spring?
At the end of March, when USDA releases its prospective planting report, if we don't see enough corn acres, if we see 88 million acres of corn, under normal conditions, that would give us less than a 50% chance of building stocks. So that's a greater than 50% chance of depleting stocks. And the market is likely to take that into account and see a premium built into the corn price, a risk premium. Because if anything goes wrong with that crop, getting it in the ground, then you're going to have a shortage. So that would likely support corn prices. On the other hand, it would be detrimental for soybeans. So around that time, we could see a switch in the relationship between those two prices, with corn strengthening and or soybeans weakening. And so that's one of the next big moves we expect to see.
All right. Well, any other comments while we talk about the 2015 outlook?
One of the real wild cards this year has been China. We're watching China to see when they will start importing corn. MIR 162, which was the gene that they've been blocking, has been approved now, and we do actually know of at least one distiller grain cargo that's been purchased. And we also have heard that they're setting up a program to where they're going to allow half of a ton of U.S. corn to be imported for every full ton of Chinese grain that's purchased. And so that would start opening the door for U.S. purchases and importing corn from the U.S. That's a key we need to watch going forward, is when will China start that program and how much corn will start flowing.
All right, and bringing it back real quick to a local level, you guys have some workshops or meetings that you've recently done. Any comments on that?
Yeah, it's really good to come here to Nebraska and get a chance to visit with some of the farmers and get a feel for what's happening in the markets here, the local markets, and have some interaction. We try to do this type of event at least annually in each state, and sometimes several times in the state. This is our grain and oilseed event. We'll have cattle analysts here later on in the year to talk to people and try to give that view that we put together from both a global and domestic view. So the events are great, and we really love to come and do them.
All right, very good. Well, visiting here again in studio with Sterling Liddell, Senior Vice President for Food and Agribusiness Research and Advisory with Rabo Finance. Thank you so much for joining us today in studio. We really appreciate it.
Oh, it's my pleasure.
All right.